The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to Diagnostic Trading Hour. This is Darrell Martin, and I'm glad to have you and be back on the show. And if you have any questions, feel free to give me a call here at 1-877-927-6648. Again, that's 877-927-6648. And some of y'all have been wondering where I've been. I've been out. I don't know if they announced it or not on the show, but me and my wife had a beautiful little baby boy. And we actually were able to bring him home yesterday. He was born Saturday morning, and a little guy, about 5 and a little over, almost 6 pounds. And he's gaining weight like crazy, though. He's eating like a champ. He came a couple weeks early, but he's doing really good now. And got a little picture, of course, you know, proud daddy, got to show that. And so if you're over there on Tiger TV or in the den there, you can check him out. So his name is Judah Leonidas Martin. So big name for a little boy, but. Anyway, so Leonidas from Spartan 300, and a little warrior there. So, and anyway, so Judah Leonidas Martin. And his sister that's his sister right there. It's my little daughter, Felicity. She's 5. And she's, of course, very happy to be a big sister, and all the cousins with the new baby there. So, anyways, glad to be back. Glad to be back on the show, and glad that everybody is doing so well. But wanted to join on back and just let y'all know where I've been and what I've been doing. And as far as where I'm going, we have some things coming up this weekend. If you haven't already, we do have the free live workshop, couple spaces left. You can check that out and just click on Dynamic Trading Strategies. Thank you so much for all the awesome comments there in the den there. Appreciate that. And we're going to be at Tampa, and we're going to be there this Saturday, and it's a 3.5-hour workshop. It's free because Nadex is paying for it. So if you're going to be in the Tampa area, definitely come check it out. So again, it's Saturday, September 29th. It's 8:30 to 12. It's going to be at the Grand Hyatt. You do have to register, though, to have a seat. So if you're going to be able to make it, please hop on there and register. And we're giving away a lot of free prizes. We're giving away silver bars. We're giving away books. We're giving away, ounces, things like that. So anyways, it'll be a lot of fun. Tommy's going to be teaching. I'm going to be teaching. We're going to do some tag team teaching back and forth. We're going to teach you about Nadex. We're going to teach you about leverage. We're going to talk about risk management. We're going to talk about identifying trades and trade setups and sort of putting the whole thing together. And you probably saw a little taste of that last Friday on the Bull Bear Binary Hour, where you had me and Tom and Steve, and we were doing a little trade on there. And that was, that was a lot of fun. And we went in, we did a gold trade, and it went very well. But it's just, tag team are different ways of looking at the market and putting all the pieces together. And so that's what we're going to be showing you at this seminar this Saturday, 8:30 to 12. And again, grab your spot if you want a seat. 8:30 to 12. So hop on there, TFNN.com, and just click on Free Live Workshop so you can get access to it right away. And the other thing is, if you don't have one, of course, I'm always training and teaching about Nadex. So click on Nadex right here, and on the Nadex banner, click on Create Account, and you can open a live account. It's only $100 to fund a live account. All right, and you get access to live charts, live data feeds, live price quotes, everything. Only $100 minimum funding requirement. You can actually make trades with less than $100. You can make trades with tens of thousands of dollars. So it depends on how big you want to go. And you can also get a demo account, and they'll give you a $25,000 in funding money. From hitting that live button all the way to funding can take as little as 5 minutes for you to get it going. And on the demo account, it can take literally 15 seconds. So just put in your username that you want, your first name, last name, phone, email address, and apply for demo, and they will get you all set up. And you'll be able to, basically start following along. You'll definitely want that if you're coming out to the show. For those of you that are listening right now that are already registered that are coming out, definitely have that demo account set up. And if you have an iPad, or if you have, any kind of tablet, or if you have a laptop, even if you have your iPhone, okay, or Android phone, Windows phone, whatever. But if you have a computer, ideally, so you can take notes with it, use it, whatever, bring that with you. And so that way you can sort of see what we're seeing, what we're walking through. And, it's just nice and helpful to, have that available. And so, anyway, wanted to send that over to you and just get you set up, get you going for anybody who is registering to make sure you have that set up. There's a lot of information on their site, and we're going to be releasing a lot of additional information soon We're going to have the diagnostic deviation numbers. I'm talking about those a lot on air. We'll be having a way for you to get access to those very soon. We're going to have access to get access to the scanner very soon. And so you can sort of see what I've been talking about all this time, about the tools that we use and how we trade and how we pick the trades and how we do it really fast. So, because, with Nadex, it's like once you figure out where you want to go, what direction you want to go, now you got to figure out which opportunity out of all the opportunities that exist on the Nadex platform do you want to choose to make your trades. And so that's, as a trader, I wanted these tools for myself. And so I went and I had them made. And I have a lot of programmers that help me out on doing things and doing different projects for trading. And so I had those made. And, we're constantly developing them based on user feedback, everything else. And then, of course, make those available to you. And let you know how I do things, how I trade, and, see how you can implement that into your own trading. And the next thing I want to go over is just doing a market wrap. So usually we start off with that, but of course had to do a little family wrap first there. And on the market wrap where we're at right now, we got the S&P, and it's I walk away for a few days and the market just falls like crazy. Anyways, but last week I did one of the things I noticed on the seasonality pattern. This week is the week after Triple Witching Friday in September's, which is historically a very bearish week. So, that has happened. Obviously, we're seeing that right now. It's just been a very bearish week. And going with that seasonal pattern. You don't necessarily trade the seasonal pattern, but you're aware of the seasonal pattern. You may have a little bit of a bias. The chart, of course, will always take over and trump the seasonal. But it lets you know, hey, seasonally, I expect the market as a whole. Now, day to day, you may have an up day, a down day. But from beginning to end of week, and really most days during the week, you are expecting more of a drop in the market. And look over here, let's check out the S&P E-mini futures here. We're down 6 points on the day right now. On the Russell, we're down 4.6. Over on the NASDAQ, we're down 25. And on the Dow, we're also down basically 27. So pretty close there. And then over on copper, we're down 0.05, 1.37. So copper down quite a bit after that bad new home sales report that came in this morning. We'll talk about that here in a minute. And looking over at silver, it's down 0.113, and not just a massive move there, but and then gold down 16.5 on the day so far. It definitely moved its full deviation level a little bit more than that, bounced back up. And we'll see where it ends up when the day is done. But 1748, I want to believe, was a deviation level on gold. And it's pretty much sitting right there right now. And natural gas at almost 2%, 1.7%. And we got oil is down up 0.7%, up 76 cents. And we got corn down $17. So continuing to drop, down over 2% on the day. And doybeans also down 2.5%, down 40 points on the day. So just some massive, massive moves there. And looking over at the euro dollar, it's down 38 pips. Aussie dollar down 22. Pound dollar down 30. And we got, let's see here, we got the Swissy, it looks like down, depending upon which one you're looking at, we'll say up 24 pips if you're on the Forex spot. And looking over the Canadian, it is up 32 pips on the U.S. Canadian. And the U.S. yen is, pretty flat, down, 5 pips. So that's our quick market wrap summary. And like I said, we have the seasonal cycle, so we always go into market wrap, and we go into seasonal cycles if there are any big ones to take note of. One of those big ones is this is definitely a down week. As far as just if you look at the historical patterns, go back after the seasonal, after the Triple Witching Fridays, the third, Friday basically right there of each September. And if you look at the week after that, you'll see that usually it pulls down. Now, once that's done, what's the next pattern to set up? Well, we're going to go into earnings season. Okay, so earnings season is right around the corner. And a lot of times that can lead into a little bit of a rally. Not because they necessarily expect that earnings are going to be great, or they expect they're going to be bad, or whatever. It's simply because the mutual fund managers, okay, there's two things that are going to go on right now. But for earnings season, the mutual fund managers are, they have to be in funds, because if the market does rally, if the stocks do go up, then they have to have their funds in stocks, because people expect their performance to mirror the performance of the market. Now, if the market crashes and the fund crashes, hey, you know what? That's okay. But if the market rises and the fund doesn't rise, then they get really upset. So that's sort of the seasonal pattern that sort of usually gives a little bit of a jolt there in October, or at least by November. Usually in October, we start seeing that a little bit of that support there, just due to that seasonality of them starting to get ready for the final quarter. Now in September, why is this week, is there a reason for the seasonality? You don't just want seasonality for seasonality's sake. Like, 7 out of 10 have been good. That's good, but why? Is there a reason, or is that just a stat that changes for no reason whatsoever? Well, the reason is that a lot of the funds are doing rebalancing this week. And so they're dumping a lot of stuff on rebalancing, and that happens in basically the last week of September. And so that is the reason why this week is a down week with the rebalancing. They're dropping a lot of stuff left and right. I mean, they're dropping stuff. They're dropping oil. They're dropping gold. They're dropping stocks. I mean, there's a whole bunch of dropping all over the place. They're dropping corn and soybeans and just about everything, and they're dropping. And so there may be a few things they hold on to, just depending upon what fund and what type of fund it is. And of course, stocks are going to see a bigger impact because there'll be more stocks with inside mutual funds and things like that. But that is the reason that this seasonality actually has why it works the way it does. Now, we will have a little bit of another seasonality coming up here in 2 days. And what that is we're going to have the end of the month, first of the month seasonality. That'll really start kicking in at the first of next week. And that is the payroll cycle. So people get paid on the 1st and 15th, they're going to be getting paid this coming Monday. People get paid on Friday on the 28th. Okay? So that payroll cycle, people get paid, money goes into 401ks, then goes into mutual funds, then goes into stocks, especially with earnings season coming up. So you could possibly see a little bit of a rally on the 28th, 1st, 2nd, 3rd there. So those few days, we could see a rally due to the payroll cycle, and then due to getting ready and getting geared up for the final round of earnings season in 2012. What else do we got going on? So that's our seasonal cycle, and that you need to be aware of. I want to see what else I have that I can give to you to be looking out for. We know that, Draghi was speaking yesterday, and it's sort of funny, the words that came out of his mouth. I was reading a little report sitting there in the hospital, just reading on the cell phone, and he's like, well, we've done what we need to do, but at the end of the day, we can't let politics and political leaders get in the way, and they're going to have to make the hard decisions to make the austerity cuts so we can loan them the money. I'm like, oh, wow. So you basically just realized that you just told everybody that, by the way, this means nothing unless everybody agrees, which is the problem we've had all along in Europe. So, anyways, it's coming out. People are figuring it out that the ECB, you can have the European Stability Mechanism, the ESM, the EBS, the whatever initials you want to give it. But at the end of the day, they have to have one monetary unit with no political influence, basically like the Fed, to make that happen. Okay? And so they don't have it. And the ESM isn't in it either, because the German court put a ruling on it where they capped their liability. So that also wasn't, the ESM is not the solution. And if people figure that out in the droves, then that's going to be a big problem, because that's going to, continue to drive the European instability crisis. And, who knows what happens next. Looking over at what else we got going on here. And we'll check out a few more things here after the break. But we got some, we had Draghi, of course, speaking yesterday. And then today we have new home sales come out. That, of course, came in worse than expected, 373,000 homes versus 381,000 homes. And they were expecting for much better numbers. And you can see over here that copper moved on down with that entire announcement and sort of leveled off at this point. But that definitely had to move down. So like I said, new home sales, that's the day to do some trades with copper. All right, stay right there, folks. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just looking at sort of what's been going on the past week with the FOMC. One of the guys who used to be one of the members was coming out saying, hey, it isn't going to have any impact. The QE3 it means nothing. And it may be damaging. Of course, the market didn't like that. You had the negative seasonal cycle going on, and Europe still trying to put all their details together. And so we'll see sort of how all that finalizes. But at the end of the day, they all got to come together. They all have to agree for it really to come into existence. And for the the ESM, and still the ESM is not going to be a solution because it's still going to require voting and everything else to make things happen. We'll get on over on what else we got going for the rest of the week. And just checking out, today we don't really have, of course, much more coming out. If you like to trade the New Zealand dollar there, you can go over. There is the business confidence report. That's a pretty big mover coming out tonight. That's coming out at 9 o'clock Eastern, 8 o'clock Central Time. So if you want to look over at the New Zealand dollar, then that would be a trade set up in time for you there. And then looking over at Thursday, and what we got on that, we got Germany has some numbers coming out. So there'll be a little volatility in Europe early in the morning. And Britain's going to have some pretty big numbers coming out with their current account information. So that's basically it's directly linked to their currency demand. And so that can have a big impact on the pound dollar. And that comes out at 4:30 Eastern, 3:30 Central. And they'll also have their final GDP coming out. But it's more of a lagging one, so it's not as big. But the current account can have a big impact on the pound dollar tonight. And then looking over to tomorrow, we also have the Italian 10-year bond auction. So that'll be interesting to see how that comes out. They've been trying to keep those rates down, and let's see, the last one was 5.82. The one before that was 5.96, and it was 5.82, then it's 5.19. So if that starts ticking back up, that, of course, is going to spell a lot of fear in Europe, and could lead to dragging everything down but the dollar in the process. Then, so just be aware of that Italian 10-year bond auction happening tonight, Thursday morning, taking place. And then looking over at the core durable goods, let's see, we got that happening at 8:30 Eastern, 7:30 Central, right here in the U.S. They're expecting a 0.2. They have missed expectations pretty much every single time since March. So March they met expectations. January they exceeded expectations. So basically every month except for January they've either hit or missed, and only one time have they hit. So they've missed expectations. It's been worse than expected. And then the core durable good orders is a leading indicator on the production. So basically it's looking at purchase orders and that manufacturing is going to continue to grow. And manufacturing has been a big key thing that they've been looking at. And so with that, just keep that in mind. That's what it's looking at right now, and that's coming out, and they've missed it over and over and over and over again. Okay? So that could be, if they keep missing it, then that's going to be a negative impact. We have unemployment claims in the morning, and the last two times they were worse than expected. They thought it was going to be 370. It was 382 2 weeks ago. Last week they thought it was going to be 374. 382,000 people were filing. This week they think 378,000 people are going to file. So they could miss that as well. And then there'll be some other things like durable goods and final GDP. Again, not as big of a number because it's more of a lagging. It's a broader measure, and it's using previous known information. That's why it's not as big of a number. Then we're going to have pending home sales. That includes new and resales, okay? And so it does have a big impact on the economy as a whole, the dollar, the S&P 500, copper, okay, things like that. Even oil, because, of course, it's demand. But pending home sales, the natural gas storage, that has been a mover and a shaker. We've been seeing it move like crazy. It's going crazy, right? Literally. Like natural gas, watch out. So, anyways, definitely be trading on Nadex or trading natural gas. And so natural gas storage right there, and that's coming out tomorrow. That should definitely have an impact. That'll be 10:30 Eastern, 9:30 Central. And that'll basically wrap it up for the U.S. We'll go over. It's going to be a whole bunch of, U.S. yen, Japan is going to have a whole bunch of reports coming out. They're not the big reports, but they are going to have some reports. And since they're doing like QE8 now, everybody's going to be watching that a little more closely than normal. Literally, they have QE8 in progress. And then we're going to go on, and they got everything coming out. They have manufacturing, they got household spending, they got their core, they got their unemployment rate, they have their industrial production, they have their retail sales, they have their housing starts. They just want to get it all out at once. So they're ripping off the Band-Aid at one time. And so a lot of news coming out for Japan, and most of that's going to start coming out for you if you are a U.S. yen trader. It's going to start coming out at 7:15 Eastern. And it's basically going to go until about, 1 a.m. Eastern. So 7:15 Eastern p.m. to 1 a.m. the next day Eastern, we're going to be getting U.S. yen announcements, just one after the other, after the other, after the other. And looking on over to what else we have going on, we're going to have, France is going to have some consumer spending reports coming out. And so we'll be watching that. And then Friday, really not a lot going on here in the U.S. We got some personal spending, Chicago PMI, consumer sentiment. So all that's going to be, in the limelight, just the way the week's been going. But stay right there, folks, and we'll look at some big things coming out next week, too.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Darrell Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Darrell Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here, folks. And I just want to go over some things going on. You may already or may not already know this, but they went ahead and Germany has, out of the 17 member Euros, they are the final ones, and they have completed the last hurdle for basically validating the ESM, and their parliament and all that fun stuff has signed off on it. And basically they just finished up the last final details, and so it's supposed to go into effect on October 8th. And with the immediate money that's going to be put into the fund, it's going to be roughly about $200 billion in euros, which really has no impact on countries like Spain and Italy and France. But it is done nevertheless. So they're putting that, and I'm sure that'll start coming out like crazy, and we'll start hearing all about it. What does it mean? And but basically what they do is the ESM can take direct responsibility of problems that occur under their own supervision. But the old assets have to be the responsibility of national authorities, and so there's all these little details about how it all is going to come together, and they're still trying to figure out all the final details. But their whole goal is to break the vicious cycle of banks and sovereign entities back and forth, and one laying it off on the other, and there's basically several different compromises they have to come to finalize a few things, and we'll definitely be talking about some of those before we wrap the show up. And what I did want to talk about real quick for you is next week what is coming up, so that way you're aware of just the news, the fundamentals that you need to be worried, not worried, or you need to be focused on and ready for. We got a big week, okay? So as far as the news And we have several things coming out. Let's see here. Let me pull them up. We got our non-farm employment change. We got our unemployment rate. We got our, let's see here. And that's going to, so yeah, non-farm is going to come out on Friday. I'm just sort of going backwards for you. And let's just see here. On Thursday, we're going to have the unemployment rate. ECB is going to have a press conference. Europe's going to announce their fund rate. Okay. And if they're doing everything they can, then that'd be a good time to lower it. And there'll be another monetary policy statement by Japan, and they're actually talking about even doing more stimulus if they have to. So look for possible more Japanese measurements to be coming out next week. And then on Wednesday, get a little bit closer to right now, we're going to have an FOMC meeting minutes release. So that had a big impact last time. We had some really cool trades that we actually able to do. And we worked those out here on the show, and they worked out well. So I'll be talking about those next Wednesday as they come out. We'll also have the ADP non-farm employment change happening next Wednesday. So as far as earlier in the week, there'll be a couple things. Really the only big one on Monday, out of Monday, Tuesday, is going to be the ISM manufacturing PMI. That'll come out on Monday. So Monday we got ISM. Tuesday we don't really have much of anything as far as the United States is concerned. On Wednesday, we're going to have ADP non-farm payroll, the other ISM non-manufacturing PMI, and the FOMC meeting minutes, which should be pretty huge to see what were all of the final little details that led up to the latest decision and just how bad is it, okay? And then Thursday going in again, minimum bid rate in Europe, more possible monetary easing by Japan, and looking at the unemployment claims. And then over on Friday, we'll be wrapping up with non-farm employment and the unemployment rate right here in the United States. So that's going to be a power-packed week of news. This week has not really been so much fully packed with news. It's just, people have realized the ESM isn't what they thought it was going to be. Even though it's getting signed, you still see, it passed all the hurdles. This is the all-end-all, right? But the euro-dollar is still down, so I don't know what it's ending. But maybe ending the euro. But it's definitely ending something, and that will solve the debt crisis because they're, they will forfeit. They'll file bankruptcy. That's one way to solve the debt crisis. But, it just keeps dropping despite the progress of the ESM, despite the constitutional court rulings, despite Parliament overcoming stuff, despite, everybody. It's all coming together, and we're still not seeing any great strength in the euro based on that. And the dollar, people are basically going over, and they're starting to look over at the bonds. They're starting to go, you know what? If Europe is going to start printing all this money, well, then maybe we need to step back from the euro. So maybe it is more stable, maybe it's not, but we definitely want to, possibly step back from it. And there's several discussions that are going to be going on. And because what's going to happen is there's no real Eurozone supervisor. Draghi's over the ECB, okay? And they really want to have a start date of this Eurozone finance minister person in place by January 1st or sooner. They're actually going to start getting the ESM together, like I said, October 8th. And there's several discussions that are going on. You got Germany, you got Finland, and you got the Netherlands. And they could retreat from this. I mean, they could decide not to contribute any additional funds. And so, they can capitalize or they can not capitalize. And the direct recapitalization can become retroactive, or they can just stop giving money. So, and they can basically get the public banks to stop putting money in the ESM. So, with the statement that's come out, it's probably unlikely that completely happens, even though Finland is definitely very upset about how everything's going. And I think if anybody's going to bail voluntarily, it will be Finland first. So, because nobody wants to be the first to bail, and Finland is not as in desperate need of the euro as everybody else is. That's of the other 16 that are in there. Let's see here. The other possibility is there could be a compromise, and all the banks could recapitalize everything that happened before, all the loans that have already happened, and then they start putting together all the new capital needs through the ESM. So that will still result in a high interest rate for Spain and Ireland. But at least, investors can be reassured that, hey, that's the end of it. That money has been refinanced. It's been refinanced at this rate, and all new funds can come from the ESM. So that's sort of a more stable possibility. Now, again, that's assuming that Spain and, France and Italy don't need a huge bailout. That's concerning the old money, and that they'll actually give in on the new money. And with all the riots going on in Spain right now saying we're not taking austerity measures, it'll be interesting to see how that goes, because first it happened in Greece. Greece finally got it passed, but now it's happening in Spain. And this guy just got elected to not do this stuff. So if he does do it, I think the rights will be 10 times as bad as they were in Greece. And then the third possible option is the new supervisor that sets up, goes in the ESM. He gets power to directly recapitalize the banks himself. Okay? And because the ESM is supposed to solve this whole sovereign bank back and forth, cycle where they're feeding off each other. And but with the bank's biggest problem being lending, and the supervisor taking over, the ESM can't use its own tool to do this. So even if he wanted to do that, he wouldn't have the ability to do it. And so the new regime, as you could call it, essentially comes in and applies only to new crisis, not old crisis. So the ESM is the European stability mechanism for new crises that come up. So he technically can't loan money to the banks for the old money that they've loaned to the countries to stabilize everything. This is only for new money, okay, not for old money. So if they're not able to make payments on old loans, then that's part of the old crisis, and the ESM is not supposed to be stepping in for the old crisis. Otherwise, it has $1 trillion it's going to be out of in 5 seconds. So that only has $200 billion to begin with. And so existing banks can start staking, the remaining national balance. They can start taking their remaining sheets and going in and buying things, knowing that they'll have the ESM behind them to help bring those rates down. And that's sort of the idea of, hey, if they can keep the rates low going forward, that'll help, offset the rates backwards and help those countries. So, and they're supposed to, give aid for, Spanish, Ireland, even Greek and Portugal. And they've all come, the national authorities saying, hey, we got to do something to fix this. And so you put all that together, there's really a lot of different things, but with the current crisis, there's not a lot of things that the ESM can do directly to help all of the existing crisis loans that are out there. So it is about, and this is something I think a lot of people have missed on the news, it's not about the new loans, it's about the old loans. It's about the old, or the ESM is about the new loans or the new crisis. It's not about the old crisis. So whatever the European, whatever mechanism from before, okay, the ECB and they had like 5 different names they've went through, I think. All those things, ESM has nothing to do with. Or if you have a problem tomorrow, come to us. Problems from yesterday, you need to figure it out on your own. So they still haven't solved the problems that are still existing. And to me, it's just a big sham. The ESM means nothing, has no power, can't do anything without the countries approving all the austerity measures. And it's limited already because, like Germany has limited its amount. I don't think it was a good idea to begin with, but now it's even a worse idea because it doesn't have any power to do anything. It can't go backwards and fix things that are broken, and it doesn't have the money to fix things going forward. It doesn't have the power to enforce things because the countries have to agree to it. So all that to be said, there has been no resolution in Europe, and the market is starting to figure that out this week. And if it keeps figuring it out, then we start seeing and where it's going to get really bad is if we start seeing really big spikes in French or Italian or Spanish bonds. So if those really start spiking up, this was sort of their last draw. This was the "this will solve everything" button, and it won't solve anything. And with that being the case, if those yields start spiking, there's nothing left to do, and that could lead to the euro, going bye-bye. So, I one of the things I said earlier in the year, I'm like, this is a crazy claim, but I think, man, if this stuff keeps going on and these countries go out, I think we could see an on-par euro before the end of the year. So we'll see, man. We get these yields, bonds, like, spiking up. And, I know that sounds insane. So losing 2,800 pips or whatever in the next 3 months. But, man, if Spain defaults, what's the euro worth? That's a ton of money gone. And they could inflate that thing all they wanted to. But would you want your money there? No. So you're going to be selling your euros and buying your dollars. So who knows, man? If Spain blows up or Italy blows up, I think Italy's a little further away than Spain. I think Italy's in better shape than most of them, actually. But just based on the public and private balance sheets. But France, they're having issues. Portugal's horrible. Spain, 25%, and that's their reported unemployment rate. So it's even worse than that. Sort of like our unemployment rate here is really like 17, 18%. And, it's just, we're nowhere near the end. So, not to be negative, but just to be realistic and to set you up for success because you're in the markets, and whether they go up or whether they go down or whether they go sideways, just keep going with it. So, there's really one direction when you're a trader. There's not up, there's not down, there's not even flat, there's really just forward. and just keep trading forward and following the market, following the charts, looking at the seasonals, combining that with, your different deviation levels and things like that. So with that, let's go ahead and wrap up. Let's talk about some deviations and where the markets are on those deviation levels for today. And so you can see, any trades that may have any oomph left possibly to set up. Well, over on the S&P, we had a deviation move down to 1422 with one deviation. Actually, 1423. It was 1422.65. So we went down to 1424. We pretty much bounced right off the one deviation level there, with 1 point away. So I did really well, and so it's definitely done on its downside for the day, and had a great reversal set up there. Over on the Russell, we went on down to 828, 826 was actually our deviation level. So it came really close. Went past the 0.7, and basically just what a point and a half shy hitting that on the Nasdaq. And then looking over at, let's see here. We look at the Nasdaq here, and we got it moved down to 2762, and we had a level down to 2772. So it actually broke the one deviation level, and a little bit of weakness there in the Nasdaq, and but it came back up above it, sitting right now at 2782. So it sort of rose right back up to just right at that 0.7 deviation. It's sort of flattening out at the moment, and then hopping over at the Dow. On the Dow, it's like we had a drop down to approximately 13,330. And let's see, 13,320 would have been 0.7. So it was actually the slower mover of the day. So the less, out of all of them, it was not the most volatile. So the Nasdaq being the most volatile out of the four. And then looking over at copper. Of course, we know copper had some big moves today with all the home sales and continuing home sales reports coming out this week, next week, 3.6805. And looking at copper, 3.7 was a one deviation move. So right here, you can see where it hit it, stopped, hit it, stopped, hit it, spiked below it, then came right back up. So it really did. I mean, it followed the deviation levels. It busted through a little bit, and that's the danger in just trying to fade a deviation level. And that's why I like trading on Nadex. You can trade like binary right here, $50 at the money, boom, put the trade in. It goes down, goes against your risking 50 of a 1-to-1 risk reward ratio. But it's very often, as you've seen on the show, that it does bounce off of it. And we definitely see it happen well more than 50% of the time. And it does. By the end, it turns around, bounces, and flies on back up. And so it worked out really well right there. Looking over at, let's check out gold. And on gold, what we got going on? Gold had a deviation move down to 1748.43. And then a 2 deviation down to 1730. It did not hit the 2 deviation. It did hit the 1 deviation right here. And you can see that's sort of where it started just oscillating. Then, it had a big spike, oscillated, came back up to that same area, oscillated, and then finally decided to go ahead and push on up to the end of the day. And that's closed out now with gold pit closing out, and it did a little rally right there at the end. Nice profitable reversal trade on gold. And let's go ahead and check out our silver contracts. And silver did have a bit of a drop earlier today. Moved on down to 33.35. And if I look over at silver right now, I see 33.28 was actually the 1 deviation move. And so we didn't even quite get down there. We did get down to 0.7, which was 33.48 right here. That was our 0.7. That's where whenever we're trading, and I'm talking about, we want to start tightening those stops. And it definitely turned around and went ahead and went the other direction from there. So, anyways, wanted to make sure you had that, and that's our market wrap for the day. And we'll be right back here. I'll do a few more after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, go ahead and wrap it up. Our deviation levels here for the day. We got oil down to 89.95, and this deviation move took it right down to 89.45. So right on that, it actually did bust through that a little bit by about, we got about 50 cents there, and they came right back up off of it. And then looking on over, we got CL there. So go ahead and let's move over to natural gas, and natural gas just it moved to say the least, and up to 3.241. So just rollovers, everything else just busting through every possible move on that. We'll go ahead and focus on corn. Corn moved on down to 722.5. And so on corn, that was just a massive, you're talking 2.5% basically move today. And so if you caught that, then props to you. Basically just about nailed a 2 deviation level. And, that's good for our food. It's good for us. And hopefully it'll keep dropping. and good for the farmers and everything else. I've heard they're even using gummy bears and everything else to feed the cows right now because corn got so expensive. So anyways, cows getting some sweet tubes out there. Your milk ought to be a little bit sweeter next time you go buy some from the store. And looking on over at soybeans, and soybeans been dropping as well, and checking that out. On soybeans, we got to move down to $15.65, and yeah, you can get gummy bears cheap. So you buy them in bulk, and basically that's about a 2 standard deviation move right there. Also, 1.5 is really about what it is, and so it moved down quite a bit and chilled out, and some big drops on food. Again, that's good for everybody. Nobody wins when food's expensive, and it makes it hard on everyone. So hopefully it'll keep coming on down, and we'll see. That could be, why? Well, part of it just, it rallied up due to all the fear. So how much of it's fear, how much of it's demand? And, I guess we'll see. I mean, we're coming down to, potential support area right here at 1543. I'm sure we could pull up and do some fib analysis and everything else. And, Steve, we could, he could master the charts for us, so don't forget to register for his stuff that's coming up here real soon. But yeah, right here around, we're getting right on this level that there's about 60, 70 points here that, it could easily stop it. But it's had a big move down. Hasn't really had a big move down on massive volume though. And so that, that is interesting. And, nothing, big compared to recently. And then looking over at, corn, it's just making, it busted through, made that new low today. And so we'll see, again, that volume, definitely, more than the last couple days, but nothing just to write home about, even on the drop on corn. So, hopefully it continues to fall. But while it does, write it on down there. So, and again, you can trade corn and soybeans and natural gas and copper, all these things that are sort of scary to trade, honestly. They scare me to trade them. If you're trading on futures markets, I've traded them often to my regret, and I've learned how to trade them on Nadex, using the spreads, using the binaries. Completely limits my risk. I'm not worried about these 3 and 4 point just oscillations that happen in half a second, and so you don't get stopped out on your trades at all. And you can ride the trend that you see fit, but without having to have the fear of getting stopped out, from literally just a 1 second move. And make sure to go ahead and be on tomorrow. We'll be having the Futures Hour with Larry Pezzavetto as well. And so there's a lot of things going on this week, a lot of things going on next week. And make sure if you haven't already registered, that you register right now for our event right here on the Dynamic Trading Strategies coming up. And, if you're ever trying to figure out what our schedule is, what's going on, you can always go on over here, and you can go to weekly schedule under radio, and you can see what shows are coming up. We got the Power Trading Hour. It's coming up right after this every single weekday from, 2 o'clock to 3 o'clock Eastern Time. And so make sure that you're just tuning in to listen in. And I'll be right back here for you tomorrow from 12 to 1 Central Time, 1 to 2 Eastern Time. And I'll be seeing you soon.